Datavault AI, ticker symbol DVLT, is currently trading at exactly $1.86, down a sharp 8.38% on the intraday session. And if you are looking at the screen wondering why a company with AI in its name and Bitcoin on its balance sheet is flushing red while the rest of the tech sector tries to find its footing, you are asking the exact right question. The market expectation here was simple, almost dangerously so. Investors saw the rebranding from WISA Technologies, they saw the pivot to data monetization, and they saw the headlines about accepting Bitcoin for equity deals, and they expected a parabolic run reminiscent of the early days of Nvidia stock or even the meme stock frenzies we've seen on Robinhood stock trading forums. The expectation was that AI plus crypto equals instant wealth. But the reality? The reality is far more complex, far more diluted, and frankly, far more interesting than just a simple ticker moving up or down. We are looking at a classic case of financial engineering colliding with operational pivots, and what is happening to DVLT right now is a masterclass in why you cannot just trade the headlines. You have to read the filings. Let's look at the immediate price action. That drop to $1.86 isn't just random noise or a bad day for the Nasdaq. It is a direct, visceral reaction to the sheer volume of paper that might be hitting the market. When you see a stock down over 8% in a single session, typically you look for earnings miss or a scandal. Here, it is structural. The company recently increased its authorized share count from roughly 320 million to over 2 billion. Let that sink in for a second. That is not a small adjustment for an employee stock option pool. That is opening the floodgates. The market is currently pricing in the potential for massive dilution, and that fear is what is driving this sell-off. You have retail traders on SoFi investing apps and users on the Robinhood app looking at the chart and seeing a cheap stock, while institutional algorithms on interactive brokers trading platforms are likely calculating the drag of that new share authorization. The tension here is palpable. Is this a company gearing up for massive growth that needs a war chest of shares to acquire assets? Or is it a company keeping the lights on by printing equity? To understand where Datavault AI is going, we have to look at the incredibly unique and somewhat bizarre transaction they just closed with Scilex Holding company. This isn't your standard, we raised cash from a bank deal. Datavault sold shares and pre-funded warrants to Scilex, and they got paid in Bitcoin. Yes, Bitcoin. Specifically about 1,237 Bitcoin for the second tranche. This puts DVLT in a very strange category of stocks that are becoming hybrid operating companies and crypto proxies. If you are using Fidelity investments or holding Fidelity mutual funds, you are used to seeing clean balance sheets with cash and cash equivalents. Seeing Bitcoin as a primary asset entry for a capital raise throws a wrench in traditional valuation models. This is why the stock is so volatile. When Bitcoin moves, DVLT moves. When the AI narrative shifts, DVLT shifts. And right now, with the price sitting at $1.86, the market is effectively saying, we like the Bitcoin, but we are terrified of the share count. This brings us to the core business, because believe it or not, there is an actual business underneath the financial gymnastics. Datavault AI is trying to do something that sounds like science fiction, but is actually a growing trend in the real-world asset or RWA space. They are tokenizing physical assets. Look at the recent deal with MTB Mining Limited in Tanzania. This is a $7 million deal where Datavault is using its technology to digitize and monetize copper and gold reserves. They are essentially creating a digital twin of a copper mine, allowing the value of that copper to be traded, tracked, and monetized on a blockchain. This is the Sumerian technology they talk about, anchoring digital tokens to physical reality. If you are a long-term believer in the digitization of everything, this is the bull case. You aren't just buying a software company, you are buying a piece of infrastructure that could theoretically underpin the trade of commodities. It's a fascinating pivot from their legacy business, and it is the reason why they recently raised their 2026 revenue guidance to $200 million. However, and this is the massive however that keeps the stock pinned under $2 today, we have to look at the financials as they stand now, not in 2026. The most recent reports showed a net loss of nearly $33 million against revenue of just under $3 million. That is a burn rate that would make even the most aggressive Silicon Valley VC sweat. When you have a company burning 10 times its revenue, the clock is always ticking. This is why the authorized share increase was necessary. They need a runway. If you are sitting at home managing your Schwab Intelligent portfolios or looking for investment help on various investing sites, you are taught to look for free cash flow. DVLT doesn't have it yet. They have a vision, they have patents, and they have a pile of Bitcoin, but they do not have operational profitability. This disconnect between the future $200 million revenue and the current $33 million loss is the battleground. The sellers today at $1.86 are voting that the cash burn will eat the company alive before the tokenization revenue kicks in. The buyers are betting that the Bitcoin on the balance sheet and the Scilex deal provide enough of a bridge to get to that massive growth phase. Let's talk about the mechanics of trading this, because it is not for the faint of heart. If you are using a standard individual brokerage account, say with Fidelity Brokerage, or even a bank-linked account, you might find the volatility here hard to stomach. This is a stock that can swing 10 to 20% in a week without any specific news, simply because of the low float, though that float is growing, and the high short interest that often follows these types of dilution events. We are seeing heavy volume today, over 7 million shares traded, which suggests a churn. Old shareholders who bought in during the WISA days or the initial AI pop are capitulating, handing over their shares to new speculative money that is attracted by the sub-$2 price tag. It's a rotation of the shareholder base. The smart money often watches the volume-weighted average price, or VWAP, in situations like this. If DVLT can't reclaim the $2 level soon, it risks becoming a penny stock trap where liquidity dries up and spreads widen. On interactive brokers platforms, you can often see the depth of the order book, and right now there is a wall of sell orders sitting just above $1.90. The bulls have a lot of work to do to chew through that supply. I want to pause here and ask you a question, because this community is usually ahead of the curve on these pivots. Comment below how many shares of Datavault AI you currently hold, and more importantly, what is your average cost basis? Are you holding from the $3 plus levels, or are you nibbling here at $1.86? It's crucial to see where the sentiment lies, because in stocks like this, retail sentiment can sometimes act as a floor. Now, let's widen the lens to the sector. We often talk about Nvidia stock or Tesla stock as the barometers for tech, but DVLT is playing a different game. It's in the picks and shovels phase of the Web3 and AI intersection. The market for data valuation is theoretically massive. Every company has data, but few know how to value it on a balance sheet. Datavault's premise is that they can use AI to put a price tag on data and then use blockchain to sell it. It's a brilliant concept. If they can pull it off, they aren't just a tech company, they become an accounting standard. But execution is everything. The deal with Triton Geothermal is another example, digitizing energy assets. They are spraying the board with deals, mining, energy, pharma, via Scilex, trying to find the vertical that sticks. This scattershot approach is exciting but risky. It lacks the laser focus of an Apple stock, which historically perfected one product line before moving to the next. DVLT is trying to build the entire ecosystem at once while managing a complicated balance sheet. We also need to discuss the Scilex relationship deeper. Scilex is a biotech company. Why are they buying 15 million shares of an AI data company? It's a strategic partnership where Datavault is licensing its technology to help Scilex with drug distribution data and smart contracts. This is a legitimate use case. The pharmaceutical supply chain is broken and opaque. Putting it on a ledger makes sense. But the financial structure, the pre-funded warrants, is a mechanism often used when a buyer wants to inject capital without immediately taking voting control or triggering certain ownership thresholds. It suggests a long-term entanglement between the two companies. If Scilex succeeds, DVLT likely succeeds. You are inadvertently taking on biotech risk by holding this AI stock. That's a nuance that most online investment summaries miss. You aren't just long AI, you're long the success of their partners. The macroeconomic pressure today is also a factor. We are seeing a general risk-off tone in the speculative markets. When bond yields tick up even slightly,